All right, guys, welcome to the third video. CLC moves with the market. So we're going to start off with these first two quotes right here. Markets are constantly in a state of uncertainty and flux. So this was said by George Soros. You guys probably know of him, but if you don't, he's one of the most famous hedge fund managers in history. He's like 100 years old. He's got like $10 billion. Very, very experienced guy and very well-known professional in the space. And this is what he has to say about markets. Markets are not static, they are constantly evolving. So this was said by Jack Schwager. I don't believe that Jack Schwager was a trader himself, but I do know that he's a psychologist and an author within the space. He wrote Market Wizards, and in this book, he essentially interviews 17 very well-known, very professional hedge fund managers, a lot of them, and just other professional traders. And as a result of his findings and as a result of his experience within the markets, he says that markets are not static, they are constantly evolving. So these guys are more or less saying the same thing. So don't just take my word for it, take these guys' words for it as well, which is that markets are always changing. This is so important to understand. So what this means is that successful trading to a very large degree is going to depend on the ability to adapt and move with the change of the market. So more specifically, your ability to adapt and move with the change of the market is going to play a very significant role in determining your odds of being consistently profitable and successful. I think that this is the number one component that determines a trader's odds of being consistently profitable, which is the ability to move with the market and to change with it. And so not only must the trader adapt to the market change, but the system itself must be designed to do that as well. So when we're talking about adaptation, we're referring to two main things, which is your ability to do that and this system's ability to do that. And so you cannot have one without the other. It's absolutely integral as a aspiring successful day trader that you possess both components. Because let's say, for example, that you have a very solid ability to manage your emotions. You don't get hung up on losses. You don't think about the past. You're not worried about the future. You don't get FOMO. You're very good at mitigating your emotions. Your ego does not override your judgment and cloud your decision making. You guys get the point. At the same token, let's say that your system does not adapt with the market change. Your system does not encapsulate variables that allow it to change with the current market state and mold into that current market condition. So despite you being a very emotionally solid trader, if your system cannot change with the market, then it's not going to matter very much that you are emotionally resilient. You guys see what I'm saying here? You're only as good as the weakest link within your system. And you have to have both systems present. So moving on, we'll stray away from the more personal or trader-based type of talk right now and move on to the system itself. So more specifically, CLC. How does CLC address market change and move with it? So first things first is the first pillar of the system, which is context. Context monitors the change and shifts in key contextual instruments and variables that influence price behavior in ES and the broader market, so that we stay in rhythm with the current market conditions. So that's kind of a longer definition. We can break it down real quick. By monitoring VIX and QRSP, which are variables that affect price movement in ES, and by performing this contextual analysis of these tools, we can understand that by their performance, by understanding their performance and how they are changing, we will then have a better understanding of how price behavior in ES is changing. So by changing with the contextual environment, that will allow us to be changing with the current market state within ES. And this will allow us to stay in rhythm with that current market environment. So we're also using other contextual variables. We're watching news. We're looking at other technical pieces of information like highs and lows, etc. But the main three are going to be that are making up our contextual analysis. And so this is going to be the main way for us to flow with the current market state. All right, moving on to location. So location addresses the formation and invalidation of supply and demand imbalances. So the second core pillar, location, as we are supply and demand traders, we are concerned with marking the formation, the creation of supply and demand zones. So zones that formed yesterday, zones that formed overnight, zones that formed during the intraday session, as well as invalidating zones where price just breaks through them. And so doing this allows us to continuously be marking and taking out areas of key interest and relevant regions within the market so that we are continuously flowing with that key structure and with these technical levels that are developing. So confirmation, the third pillar. Confirmation focuses on real-time buying and selling through order flow so that we stay updated with shifts in market activity, not only at our location of interest, but throughout the session as a whole. So order flow, the flow of buying and selling orders coming into the market, is how price moves. And by staying updated and by watching the shifts in that buying and selling equation, we can have a better understanding of how we should be positioning ourselves as a result of that information. And so, quick disclaimer, we're not obsessively watching the tape. We're not paying attention to every uptick and downtick. When price is not at our zone, we are only paying attention to the relevant information that comes from the tape. So like delta outliers, bids that continuously redefend price, zero prints, etc. Okay, so moving on, context, location, and confirmation, as we now understand, is designed and engineered to adapt with the changing market conditions. And so since we understand this information now, and now that we understand what CLC is, how it filters out low quality trades, and how CLC adapts to the changing market conditions, we can move on to a more in-depth explanation of context, the first core pillar within video 4.